Hello traders out there in Traderland, D7 here with Grok Trade. Markets go bullish on Friday. Big pop, pop, pop. This is the weekend edition, good through Sunday. Sunday, October 14th, 2019. Markets in bullish territory. Big move up across the board. Really doing well. US dollar down. Crude oil up 2%. Silver, gold down slightly. VIX dropping 11% on Friday at 15.6. Bitcoin at 84 at the time of this video. And here we are looking at the markets. The S&P 500 is the big dog. Check this out, guys. Big symmetrical triangle. Big symmetrical triangle. We bounce, we go up, have a big gap up on Friday. We shot up, but we sold off by days in. Extra bonus points if you can tell me what type of doji this is. Doji on the Spider SPY on the daily chart. Extra bonus points if you can tell me what that is. Okay. We are in consolidation. We're caught up in the moving averages. Look for more consolidation. We should stay below the red trend line and above this blue trend line. We should stay around here. Look for more consolidation going into the future here. Very hard to swing trade in. Very hard. This is the good time to be covered calls or just to sit still or loosen up stops and just kind of ride this out. You could do that, or just get out and go in a lot of cash. You could certainly do that too. If I look at the weekly chart, and I'm using TradingView, and you can. There's a link to the charts that we use down below in the description area. But the weekly chart, this is very interesting to me. Last week went down, down, down. We come up, we hammer out above the support line, this blue line here. So this is a good chance to pop. This past week, we get another hammer. We go up, and then we go down, 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 and then we come back up. Okay, that's where we're at. Or I think we open, went down, up, and then pulled back a little bit by week's end, or some variation of that. This looks bullish to me. At this moment, I think that we'll have a good opportunity going bullish here. If it doesn't go bullish, we go sideways, and if we do stay in consolidation, this could start to go either direction. And because right now it's set up to go bullish for the weekly with a big time resistance right here, another resistance here, another resistance there. It could do that. However, again, if we stagger step, go sideways and stay there, then this starts to build a case for it going lower, busting through these support levels on the weekly chart. This is a really interesting time. On the weekly chart, we don't have a lot of space before we start running into these trend lines. So we're getting into the apex of this triangle. So that's what I'm watching. I'm watching that very closely. If you go here to the diamonds, this is the Dow 30. Looks much like the S&P. The NASDAQ shoots up. The tech stocks went up, got over a trend line, came back down. So I could see this, pulling back here. Russell's 2000 small caps, nice bullish pop off of support. We're caught up in the moving averages. Look for consolidation. Again, we're inside the symmetrical triangle apex area. Look for a lot of choppiness. A lot of choppiness that can take place. Financials, always watch out to see direction. We had another pop up, a big sell off with a red candlestick below the 20-day moving average. We're caught up in the moving averages to look for consolidation between these two trend lines. US dollar, though, on the other hand, very bearish. We broke this symmetrical triangle on Friday, and the rising wedge we broke. That bearish on the US dollar. That should help out commodities. That should help out the equities. Speaking of commodities, crude oil is going higher, and that is to be expected. Bouncing off of support, caught up in the moving averages and below most of them. Silver, we're in a big bull flag. Look for that to go long shortly. Gold, big bull flag. Look for that to go bullish at some point here. VIX, big drop down. We're below all major moving averages. The VIX, again, is at 15.6, so that's a fairly low number on the VIX. And Bitcoin, you look at Bitcoin, down. It's kind of a bear flag. I'm not liking what I'm seeing on this. But nonetheless, I do hold Bitcoin for the long haul. I'm hoping if I could get this thing to drop lower, I'll start to buy up more Bitcoin. But right now, I'm just staying pat on that. Let's go to some stocks of interest. Let's go to Grok tech stocks. Look at Apple. Apple popped up over a major resistance. Now this rising wedge is null and void. It is now, it doesn't matter to us. These other trend lines are going to act as support. Big volume. Apple's doing very well. AMD is popping higher, caught up in moving averages. Potentially, we have earnings down here, and you can hover over earnings October 25th. That looks like you could probably get some more bullish activity. Amazon is just getting beat to death. However, let's do this. This is interesting. I think that we have a falling wedge, and this could get bullish soon. And we have a bullish divergence on the MACD. Look to be going long on Amazon fairly soon. Baba is caught up in moving averages. I wouldn't mess with that. Baidu, nothing there. Booking, nothing there. Cisco, nothing there. Catfish, I call it Catfish. Cognizant, CTSH, nothing there. eBay, nothing there. Facebook, the thing that's grabbing my attention on Facebook right now is this. Oh, it's not grabbing my attention now. Never mind. Nothing there. Google, nothing there. Google with an L, nothing there. GoPro, pop. This could be a bottom capitulation with all the volume. This could be an opportunity, but we do have earnings November 4th. That's interesting. That is interesting. Microsoft, nothing there. MU, nothing there. Netflix, nothing there. Nvidia, rising wedge, be looking to short. Oracle, looking good. Look for that to continue to rise up, but I just don't like how big it is. You're not going to make a lot of money. Beta is really low on that. PayPal, nothing there. Shop is a bear setup. There's a bear flag. Look for that to drop. Snap could be bouncing soon, but it's nothing there. Tesla is choppy. Nothing there. Twitter is nothing. So hardly any trade setups on all the technicals that I'm looking at here. So that's telling, right? It's telling. That's telling. I think right now with the markets, we're in a hold pattern. So I was at church this morning, and somebody came up and asked me, who's got quite a bit of money in the markets. He goes, Des, should I still be putting my money into the markets right now? And I always have to say, I'm not a financial advisor. I was very particular. I was very specific and conscious of not getting licensed. So I don't have my Series 65, my Series 7. I don't have any of those. And it's because I spoke with the SEC back before I started this company 12 years ago. And I said, should I get certifications? If so, which ones? Because I want to make sure I'm doing everything by the book, right? And basically they directed me down the path. I talked to two attorneys, an enforcer and just one of their attorneys. It was a conference call. And they said, nobody calls us. Nobody asks these type of questions. This is fascinating, you know. And they said, well, we can't give you legal advice, even though they're attorneys. That was crazy. But they said, stay as an educator. If you do, you don't have to go through all of our red tape. You're not under our umbrella, and you can just be an educator. So I've always wore just the educator's hat. Sometimes I thought I should get certified, and I could take your guys' retirement monies, all your accounts, and manage those for you. And I think a lot of you would be interested in that. If you, not that I'm even thinking about doing this, I would be interested if you were put down below. It's like, man, I would love for you to manage my money. You know, people always ask me, and I always say, I'm an educator. I'm not a financial advisor. Don't even pretend to play one. But anyway, he asked me, you know, should I still be putting my money in? And what I told him, what it looks like technically out there in the markets is that we have the markets are stalling, because we're up 11 years in the markets. 11. And usually you get a 5-year bull run and a 3-year pullback, 2 to 3 year pullback. That's typical. 5 up, 2 to 3 down. Okay, that's very, very typical. However, we've gone up 11. So think about this. We've gone up twice what the norm is. So usually when you get pullbacks, if you look at the technology bubble when it popped, we had a pretty good pullback. What was that, 40% or something, 45? So, and then in 2000 when it bubble popped, and then in 2007, 2008 when the financial crisis happened, at that point we had about a 65% pullback in the markets. And so let's say it's the average pullback is a 50% Fibonacci retracement, 50%. So if we've gone up 10 years or 11 years, we have a 5-year pullback that we're going to be looking at right now. And it'd be nasty. So the question is, should we be putting money in the markets after we're very extended to the upside? And I'd say probably not. What I would be doing is looking into quicker swing trading, because the swing trades, as long as you have the chops, you can make money. Swing trading is where it's at. And then in a choppy swing trading environment, which we happen to be in this very second, day trading is what you want to do for sure. Day trading in and out. But if you're here in the US, you have to have at least $25,000. I would say you need to have more than that, 30, 35 plus thousand to be able to properly day trade. And yeah, so that's what you're looking to do. Now, when the markets do correct, when it does drop, when that happens, then you can short the market. You can get in and short. Matter of fact, you can jump into bearish ETFs, exchange traded funds that are bearish or short funds that you can buy long. So you buy them in your self-directed IRAs, and you can purchase those. And if the further the market goes down, the more money you make. The timing's not right for that yet. So I think at the next election cycle that we have, if there's a change that takes place, people don't like change, and you can expect that to be a strong enough catalyst to maybe send the markets into a much needed retracement, if that makes sense. So that's kind of where we're at. And we have a mentorship. If you think that we could help you in your trading, if you think having our knowledge, Mark the Meerkat's knowledge, my knowledge, if you feel like you could have our decades and decades of experience given to you to help you in your trading, then one thing that we do is mentoring. We mentor. And let me explain what that is. A lot of people don't know. A lot of you have been listening a long time. Let me know how long you've been listening. Have you been listening more than 3 months, 6 months, a year, 3 years, 5 years? Let me know how long you've been listening. The question is, with the right information, could your trading get better? And if so, how much more could it get better? How much more consistent could it be? Or do you know how to recognize a market reversal and how to capitalize on a market if the conditions go very bearish? Because there's a lot of money to be made on that. And I'm looking forward to a big drop. Not for the economy, not for people that get hurt, not for accounts dropping, but because it's an opportunity. It's going to happen with or without me. I'm going to take advantage of it if it drops and when it does. So anyway, all right. How we do our mentoring is this. You spend 3 days with us. It's a Saturday, Sunday, and Monday. And we do it on the internet. You see our faces. We see your faces. We talk, and you're looking at our screen. It's like you're in our office over our shoulder looking at our screen. We can see your screen. We look at your stuff. We show you things that you need to be doing to make money in the markets, to fill in those gaps that you have. Those 3 days are magical. And I don't say that lightly. We have a number of full-time traders in our business now who have come under our banner, and that's exciting. Not everybody is successful. If you are not disciplined, you can't follow the rules, and you're emotionally involved into your trading, you're not going to be a right fit for us. I'm telling you right now. We used to take everybody. We don't now. We go through a little bit of some questions to find out if you're a right fit for us. So we're looking for people to be a right fit for us. And again, I'll share this with you. We've been doing this a long time. I've been training over 14, almost 15 years, teaching my own business for 12. What I have found for those that make it versus those that don't is the ones who make it. I mean, these are individuals who all have the same education, the same mentors, the same guidance, the same help. Why do some make it and do incredible things and others not? And here's what it boils down to. I'm going way behind the scenes. This is me doing a monologue, and I had no idea what I was going to say at the end of this video, and this is helpful, I think, for some of you who are still on. If you made it to the end, let me know. But what I found was this. If a person had these two things, it took a while to find it, but one of them is discipline. If the student is disciplined, this is what I mean. Are you disciplined? Do you make it at work on time? Is your house run well? Are you somebody who is exercises? Are you somebody who watches what you eat? Are you somebody who looks to take the steps for success in life? Somebody who is disciplined to a fault almost. This is why I think it's interesting. I find that 15% of our students that come through are female, and those females tend to be highly disciplined. They're rule abiders. So if there's a set of rules that's given to you, it seems like the females will follow those rules far more than, or more likely than the guys. The 85% of guys that make up our ecosystem. And the guys, and I'm one of them, we like to tweak it, look for the rules, and see what we can do to make it better. And we bastardize it, and we actually make it worse. It's funny how we can give 10 people a winning system, and 8 of them will figure out a way to lose money at it. But that's the engineers, because you guys, if you're listening to this, you're an engineer-minded person. I already know you, and tell me how close I am, okay? That you are engineer-minded. You're very pragmatic in how you think. It's ones and zeros, black and white. If there's a problem, you have a desire to solve that problem. and you'll go at it with a heavy dose of objectivity, okay? You tend to, some of you tend to be lefties, southpaws. A lot of you have a desire to fly or have flown, or you are a pilot. We have a lot of those that come through. If you're female, you're very independent, and you're strong. You're a strong woman. And if you are in the workplace, you have your middle to upper management, if not the owner of a business. We get a lot of business owner females that come in. So that's you guys. Well, discipline, whoever is disciplined, that means whoever can follow our rules and be disciplined to do what is asked of them. Your chances to do amazing things in the stock market go up dramatically. Now, that's one thing. Being disciplined is one. But you can be very disciplined and mess up on the second one. And that is having an emotional resolve in the marketplace where you're stone cold, okay? If you are highly emotional to wins and losses in your trades, that will cause you, it will justify in your mind why you should break rules. That justification to bad behavior is a bad thing as a student or a trader in the marketplace. Very, very bad. It's a disease. If you can be disciplined, highly disciplined, and emotionally resolved in your time of turmoil, your time of success, you're even killed, then we want you as a student. Mark and I want our students to do better than all the other students out there today. We want our students to develop faster than all the other students out there today. We want our students to be more successful as a whole, as a group, than all the other educational groups out there today. The only way to do that is to find those people who are disciplined, to find those people who are emotionally sound, that aren't, because I'm emotional, man. That was my thing. I can be disciplined. Check. That was a big thing. Most people aren't disciplined and emotionally killed, okay? I was fortunate enough to be disciplined. My problem is, that's how I lost 40 pounds. If you guys watched me more than a year, you know that I was the fat Dez. That's my name, Dez. Now I'm the skinny Dez. You've seen it. My wife says no one has had more haircuts than me. I constantly change my haircuts if you look at the different videos. It is crazy. I didn't think I changed it often, but I do. That's the artist in me. I went to art school. That's what I did. But I digress. Small touch of ADD, as you can tell. But the problem that I have is if I have 3 winning trades in a row, I think that I'm someone special and this is awesome and I should run around the house with excitement, right? This is fun stuff. At that point, I'm starting to make decisions to justify bad behavior, meaning that I'll trade with more risk than I should be. That trading with more risk, and then when I have a losing trade, I take a bigger hit because of that, okay? My computer just went to sleep on me. Hopefully it's still recording. All my monitors went black, okay? It shows how long this video is going. But anyway, my point here is that was the part I had to get over. If I had 3 losing trades in a row, man, I wanted to go kick puppies or something. Not really, okay? But it was just hard for me. All of a sudden, I would tighten my stop losses really tight. And then I was constantly getting stopped out all the time. And then all of a sudden I thought, well, the stop loss is my problem. So then I'd trade without a stop loss. And now I've broken all sorts of rules. I mean, you can't believe all the rules I was breaking. Holding over earnings, holding over splits. I would go the basic stuff. Basic stuff I was messing up on. Why? Because my emotions justified bad behavior. So, listen, I want you, if you are disciplined, emotionally sound, and you want to be a massive success in the marketplace, you want to do much better than what you have in the past. You're done losing money. You're ready for somebody to hold you accountable. You're ready to start doing things. Take it from a hobby level to your business level, hobby level to a professional level. When you are ready to do that, when are you going to be ready to do that? Hopefully soon. Anyway, Grok Trade, Trading Mentor. Click that link. You can find all about us. You guys have been around. You know what's up. So if you made it to the end, say I made it. Say you made it. Chat with me. Love it. And you guys who played sports, some of you are power lifters, rock climbers from your other one. I love that, man. Some of you, yeah, it's neat to see, getting to learn and know you guys a little more. But anyway, we'd love for you to join our ecosystem, be part of the Grok group, to become Grok grads. If you're a Grok grad, you'll be invited to special Grok grad sessions. We do those in the evenings where we all come together. And so anyway, there's a lot to the mentorship. So hopefully you can join us. Hopefully you can find out a little more about us. Some of you guys are highly skeptical, and I would be too, because I had to blow through 2 accounts before I finally went and got a mentor. The only reason I offer mentoring now is just because that's what did it for me. That blew through my first 2 accounts. Whew, if you haven't blown through an account, I mean, I've got that t-shirt. But when you blow through 2, either you stop what you're doing or get formally educated, and that's what I did. All right, take care. I can't believe I've gone this long. You guys have a great rest of the week. Let's see what happens this week. Be interesting to see. So we'll catch you guys later. Bye.